Good evening, everybody. Happy Thursday, Thirsty Thursday. I've got my drink right here, my seltzer water, little the little Mio drops in it. Hope you guys are having a good Thursday. Um, who's playing football tonight? I don't even know who's playing football tonight. All right, guys. Sorry, this is a little bit late. Also, I didn't have an afternoon update, so we'll do the daily factor show, but then after that, we can also, check into the kind of the usual suspects. But let's get this daily factor done first. Who do we got in the house? We have Chad here, Dividend Degenerate, Froggy, and Richard. Thank you guys so much for being here. Let's share this darn screen. My phone's not on me, so you guys can't text me. It's on the charger in the other room. All right, so I guess let's look at the market really quick, but then we're going to get in the daily factor. Gosh darn it. I mean, it's just not a great look today or yesterday. I mean, rallying and then selling off. Every time we rally, we sell off. Anyway, that's the SPY, or that's the Qs. Here's the SPYs. I guess let's look at futures. I saw on my Discord that somebody said that they might have a deal on the shutdown. That's what I was saying, because I've been hearing that they were going to wait till after the election for some reason, after the November 6th, and then they magically find a deal to catch. So anyway, but I don't know any of the details yet. I don't know. It doesn't matter to me what's happening. It just matters to me how the market's perceiving it. Right now, the SPY's unchanged, so it's obvious it's not doing anything to the market. So in any event, all right, well, let's look at Bitcoin and see if it's even rallying. I mean, it's just been kind of a rough couple of days, or longer than that, ever since the 28th on Bitcoin. It's been a rough, 2 weeks and longer than that. But I mean, that's our most recent little peak up there. All right. Well, let's do the daily factor. So it's Thursday night. So on Thursday night, I was going to do SPYs and Q based high yield funds. There's so many SPY based high yield funds. I didn't think we'd have time to get to both of them, to get to the Qs also. So we can do the Qs tomorrow night or Saturday or whenever the next time I do one of these is, probably tomorrow night. But we'll do the Qs. So we'll do High Tech Friday night or whatever. But right now is Thirsty Thursday, and we're going to look at SPY surrogates. Now, the max factor is my own metric, and it's a different way of looking at high yield funds. These funds that pay 50, 80, 100%, just they broke the traditional Wall Street metric. So I had to invent one that works better, that's more effective at figuring out how the yield interacts with the NAV and how it goes together to make a total return. But I have to separate them out, and I also have to factor in risk-adjusted reward. So that's what the max factor is. And once a week, I have my top 20 max factor show. But it occurred to me that we're just seeing the same probably 30 funds every time. And so I like to do these daily shows so we can look at some funds we don't normally see. It was the same 30 funds, and they're mainly single stock funds, So we didn't really get a chance to see. We didn't hardly ever see any of these that we're going to look at tonight. Some of these would occasionally get up on the list, but not all of them. So anyway, I think it'll be interesting. All right, so then also we have the entire max factor printed out. If you guys have any questions about your own fund or something, we can also look at the entire thing. Everything's up to date. Let's get started. That's the entire thing. And where in the heck is it? All right. Let's go yield chasing. Oh, what? Gosh darn it. That's not right. Anyway, whatever. Gosh, I made a mistake and didn't catch it. I don't think iSpy was going to win anyway, but gosh damn it. Anyway, all right. Well, let's go yield chasing. So the highest yielding one amongst the SPY-based assets is YSpy. And then we have WDTE, XDTE, SDTY, yielding 23. So the first one, YSPY, is 50, but then there's a big drop off. And the next one, WTT, is Defiance. And the next ETE is Roundhill. And there's another drop off from 37 to 30. Now, XDTE and SDTY are somewhat similar type of funds in construction strategy. However, XDT is getting, more yield. So SPY-T is a 20% target fund from Defiance. They did this in order to get more upside that people were complaining about WDTE, which is also a Defiance product. So they brought out SPY-T. Now people are complaining about both of them. So anyway, so then we have XPay. Now XPay is a similar type of fund to SPY-T, except it's from Roundhill. Similar in the fact that it's a 20% target. It does it a little, it's a different way. They just sell stock, or I don't know if they use swaps, or I think they just literally sell stock in this fund. But they may use total return swaps, whatever. They don't do options. It's a different strategy, but they still target 20%. All right, then we have IVVW. I believe that's from BlackRock, and based on the IVV, which is BlackRock's SPY, right? Or iShares' SPY. Yeah, Vanguard SPY is VU or VTI. It's VU. Vanguard SPY is VU. BlackRock SPY is IBV. And then we have State Street SPY. It's called SPY. Anyway, T-SPY right here. That's from our friends over at Tap Alpha. Good job, Saikatara. He's doing a good job with that fund. And our other fund is our other friend is the sub-advisor on that fund, Matthew Tuttle. So we're super friendly with that fund. Then we have XYLD from Global X. We have SPY-I. That one always does a good job. It's from Neos. Then we have SBAR. I wasn't sure to put that one on this thing. I mean, it is based on the S&P, though. It's barrier options, and it's a little bit of it's just a different strategy. I figured it'd be interesting to have. Big Y, not really a SPY fund, but I mean, it's the 50 biggest stocks in the S&P. So it's like, I guess you could call it a SPY. It's a momentum SPY fund because, it's a big cap SPY fund. Let's just say it's the 50 biggest stocks. Anyway, then we have RSPA. Now I forget who the company is, but this is equal weighted SPY. So this is good for diversification and other things, and they sell options on that. Now, these only earn 9%. JEPI only earns 8%. That's from JP Morgan. Then we have SPUT. These guys sell put options, but they only do it in the monthly time frame, so they don't get as much premium, and they only do it on half the portfolio. And then we have iSpy, and this is jacked up. I can't believe it. Anyway, gosh damn it. All right, well, forget about iSpy. All right, so that's our lineup. So let's see on NAV return. Who's our NAV return champion? iSpy. Shouldn't surprise us that much being from Neos. Well, I'm sorry, I take that back. Gosh darn it. SPY-I is from Neos. iSpy is from, I think, iShares. But anyway, that's messed up. It yields way more than that. I'm sorry about that. Just maybe it would have won if it has the best NAV too. Man, let me check something out really fast. Let me check this out really fast. There it is. iSpy right there. How in the heck did they figure? Gosh darn it. You've got to be kidding me. Yeah, this is a Google problem again. Google's telling us the price is $24.35. It's probably $24.35. I'd really like to know what this one does. So let's check this out really fast. If it is $24.30, no, and that's not even right. So just scratch it. Gosh darn it, Google. I should have caught it. I'm mad at myself, not Google. I mean, Google sucks on a daily basis, but I should have caught it. Anyway, we'll scratch iSpy from the competition, or SPY-I, whatever it's called. All right. So anyway, the best of the people that are in it, the best performing NAV return is Big Y, and that doesn't surprise me. Big Y is an incredible fund. Um, it's concentrated because it only has 50 stocks of the S&P 500, so it only has that 1/10. I mean, I said half earlier. I was thinking of Nasdaq. 50 stocks. It's extremely concentrated. It only has the top 10%. Market cap. So it's big cap tech. It's going to have NVIDIA, Apple, all the things you've heard of and stuff. And it probably won't have some of the more stable things, but it probably has all the data centers, all that kind of stuff. Well, in any event, they do a good job on NAV. They don't pay a very big yield, and they do that on purpose. They target a 12% yield. So, it's up from 50 to 52 and a half. So, or 50 and a half to 52 and a half. It's up $2. $2 on 50 is 4%, right? Yep, exactly. All right. S put, we already spoke about that one. Now that one, the fact that they sell monthly options is one factor. And so that means they're going to be more stable, but it means you're going to have less yield, and they only have a 5% yield, and they only sell options on half the portfolio. So, this one should get NAV upside. It does. T-Spy, these guys do a great job. Now, these guys get a little bit more yield. And how do they do that? Well, they use daily options. Now, daily options give you more variance. They're riskier, but they also cap your upside a little harder, or because they cap it more often, which keeps it capped, and it's more effective. So anyway, but you get more yield. So here we have 13.8% yield, and they still got decent upside, 2%. I mean, 2% is not bad considering the market, has pulled back quite a bit, or not quite a bit, but considering the market pullback. All right, so then we have XPay. This is the 20% yielder from Round Hill. They just sell stock. They got some NAV, and they got some NAV return. So then we have XYLD paying 11.8%. That's it's not really a target fund, but they generally pay around 12%. It has decent NAV, but it's the same NAV as SPY from Neos. Neos does a good job. Now, Neos uses monthly options, and that accounts for some of their safety and stability. But they're able to use monthly options and squeeze a little bit more income out than some of the other monthly option guys are. Anyway, IVVW, now this one also, I believe, probably uses monthly options. And this one's a good one, yielding 16% and has positive NAV. RSPA, now this one doesn't have as good of NAV as the ones that were concentrated, because the market is still in a bull market. So the concentration is not helping yet. If the market tanks, that this one would likely pull ahead of Big Y. But right now the concentration is still working. So that's fine though, but it could be another choice, RSPA. Then we have SDTY, that's from YieldMax. Flat NAV, 23%. Then we have JEPI, flat NAV, only 8%. Between those two, if I had to take my choice between those two, well, I don't know. That's apples and oranges. SDTY uses daily options, and JEPI uses monthly options. And if you look over here to the stable decks, you can really see that. Actually, you can. Actually, JEPI is actually, oh, no, yeah, I keep forgetting. I think this is volatility. I switched it to stability, so the higher number is what you want. Anyway, so sure enough, JEPI is more stable, uses those monthly options. So, but they both have this, but basically they both have the same NAV return. So it's a toss up, I guess. If you want yield, you go SDTY. If you don't care as much and you want a little bit more stability, you go JEPI. All right, then we have SPY-T. It's 20% target fund, like we spoke about. NAV's flat. XDT from Round Hill, NAV's down a point. But it pays a lot of yield. SBAR, the barrier option fund from Simplify, it's down a little bit. YSPY is down a little bit. That doesn't surprise me. That's probably the riskiest one on here. We're going to get over to the stable decks in a second, but I just peeked over here. Yeah, it is the riskiest one on here by a long way. And why is that? Well, these guys use daily options. Let me think about that. try to think. They may use weekly, but whatever. They use shorter term options and they use it on, it's not daily. I take that back. They're selling options on ETFs. ETFs don't have daily expirations, but they're selling options on leverage ETFs. So they're selling weekly options on leverage ETFs. It makes this saying, great in a runaway bull market, but that's not what we have. This is only looking back a quarter, and the market's been acting kind of squirrely the past couple of weeks, especially Bitcoin. Anyway, WDTE, this thing is from Defiance, and it has the worst NAV, but it pays the highest yield. So go figure. That totally makes sense. Out of all of them, it has the highest yield and the worst NAV. It's just math. That's what I'd expect. All right. So, but we can still try to find one that's the best combination of all of them. Let's just go for pure stability. All right. XYLD from Global X, more than twice as stable as the broader market. JEPI, almost twice as stable as the broader market. And those make total sense. Monthly options. Monthly options and low yield. Or the monthly options also kind of cause the low yield, but monthly options cause stability, other things being equal. But they don't cap the upside as much. Even though these are stable, they should be able to get some upside, and these were two of the ones that are in the green. Then we have SBAR. Now that's a barrier option. It has like a 15% barrier on it, so it doesn't really lose money in the grand scheme of things until it goes under 15% down. So not that its NAV won't start to move down if it's getting close to 15%. It doesn't mean it can't lose money, but it's kind of a more stable strategy. SPUT is really stable too. Like I was saying, they only sell options on half the portfolio. IVVW uses monthly options. It's stable. SPY-I's NEOS. Monthly options, and it's NEOS. These guys are stability experts. RSPA's stability comes from the fact that it's not concentrated and it pays a low yield, or probably not concentrated and uses monthly options, and therefore you get a low yield by comparison to low yield. Now WDT, this is our yield champion. This is the monster yield here. You give up a little NAV here, and also it's not as stable as the other ones we just mentioned. That makes sense. SDTY not as stable. It uses daily options. iSpy not as stable, or excuse me, iSpy's out of here, but iSpy does use daily options if the numbers were right. iSpy would be down here somewhere likely. Big Y. Now Big Y uses monthly options, and it's still more stable than the broader market, but it's actually on the, it's a little bit less stable than some of the other ones. Then we have XDTE. These guys use daily options, but all these are pretty stable. XDT, XPay, SPY-T, they're all about market stability. Even T-SPY. T-SPY is a little bit under market stability. And then we have Y-SPY, and Y-SPY is the outlier. But we've already spoken about that. It's just because of math. Now let me show you. Let me try to demonstrate this stable DEX. So the most stable one is giving us, XYLD. Okay, well, and the least stable one is Y-SPY. So let's see what that looks like graphically. Let's see here. Hang on a second. Let's see, XYLG, and then Y-SPY. All right, we'll go. This is just back a quarter, but you can visually see it. And mathematically, Y-SPY is at 50 on the stable DEX, and XYLG is I think it's a 2 or something. So it's 4 times as stable. Well, look at the price moves. Even on a percentage basis, it moves about a fourth as much, be that up or down. This, so that's the stableness is neither good or bad. It just is. It just is stable. It's mathematically more stable. Remember, it can't predict the future. No guarantee it'll stay that way, but I would imagine it. It might. All right, so let's continue on with the show. Complete SPY analysis. Okay. Okay, I guess that's it. I just wanted to demonstrate. So yeah, the stable, that's just a metric. It just shows how crazy it is. It doesn't mean it's good or bad. Now, we'll look at safety factor in a little while. Let's just go to, who do you guys think won? Or I guess we can go to safety factor. Usually safety factor is also going to be the winner. Oh, but not always. I Spy. So what safety factor looks at is it looks at, how many units of stability you have, but then it also looks at performance. So, I Spy is a good one. Or I Spy's out of there. I was thinking that was Spy Eye. I'm sorry. Gosh darn it. I can't believe I didn't get that right. Anyway, okay. Well, look at this, SPUT. Now, this one is super stable, and it does have positive NAV. It's one of the highest NAVs on the thing and one of the highest stability. So that makes sense. Big Y, it's more stable than the market, and it has the highest NAV out of any of these. So I think that makes sense too. As far as safety factor goes, you got SPUT, Big Y, XYLD. Look at this one, super stable. It's, twice as stable as the broader market, but it's maybe a little bit too stable because it's only up 1.5 where similar funds are up 3 or 4. Anyway, that's, Then we have IVVW next on the list, SPY, XPay, T-SPY. Those are our safe ones, and that doesn't surprise me. Now let's look at the max factor. So who's going to be the winner? So remember, iSpy's out of it. So I'm just thinking by eyeball. If it was me, I'm obsessed with Big Y, but 10% it has the best NAV return. Almost 11% on yield. Yeah, there's other ones that might be more stable. I don't know. Let's just run it and see. Wow. Or yeah, it was there. Okay. Yeah. Well, Big Y, I think that's pretty obvious. You have it's more stable than the market, checks all the boxes, has the highest NAV return, and it has decent yield. Anyway, XYLD is second. That's fine. XPay, I know that a lot of people be happy with that. XPay is, I kind of missed the boat on that one. I made a bad video about it. I don't like the idea of selling stock. I think selling options is better plan, but math doesn't always prove that right. I still think in an extended downturn that selling options would be better. But anyway, the market never goes down, so I guess we don't have to worry about that. Anyway, XPay, especially this quarter, because it has been a good quarter. So all things considered, not for Bitcoin, but for XPay, it has been, positive NAV, and twice as much yield as Big Y, but Big Y had more than twice as much, NAV upside. So these are all close right here. You look at these numbers. That's what I was looking when I was prepping for this. The first from T-SPY to SPUT to IVVW to XPay to XYLD to Big Y, very little difference. Just take your pick. Take your pick. If you're a yield chaser, it'd be IVVW. Because then they all have positive NAV return. They all have good qualities, and just mathematically, there's not a lot of difference. Anyway, all right. Then we have SPY. It kind of surprises me that this one, I don't know why that one's so low. Well, there's really not a lot of difference in that one. Now, that one goes in that first group also. Then these other ones, there's a kind of another leg down. And this doesn't really surprise me because SDTY, daily options, RSPA, well, the market's going up, so it's too diversified or whatever. Not concentrated enough. JEPI, JEPI, kind of low NAV return compared to the others and kind of low yield compared to the others. iSpy is not in the competition. SPY-T, SPY-T has negative NAV return. Come on, SPY-T, what are you doing? Then SBAR, XDTE. That kind of, I really like XDTE, but when you have ones that are actually protecting the NAV a little bit better over the past quarter, you have to rank them above, or the metric does. YSPY and WDTE. All right. Well, now let's rank them by safety factor and see how close it is. So it goes Big Y, XYLD, XPay, IVVW. So safety factor goes SPUT, Big Y, XYLD, XPay. The good ones are high on both lists. Plenty of safety around here, plenty of stability. Some of these check all the boxes. I mean, really big Y. I mean, you get double-digit yield in the best NAV return. I mean, it's had a heck of a quarter. But if that wasn't enough NAV return for you, XPay could work, or IVVW. You're not going to do quite as well on yield, but those could work if you need a little bit more, or T-SPY for that matter. I mean, it's hurting T-SPY a little bit out of all of these. It's a little bit out of the top flight. It's a little bit more dangerous. It's just because of the daily options. But anyway, they do a great job over there. All right, guys. Well, your favorite fund made it. So yeah, we can just have a daily update now. We'll just have an end of day update. Is there? Let me. I didn't grab any cheap stocks today. Gosh, I probably should have. Tomorrow it'll probably be back up, just like the other day. And then I'll probably buy, and then Monday it'll be back down or something. I'm having a hard time. I'm just waiting for this thing to stabilize, and I haven't really seen any signs of life, really, from this. I mean, but maybe we're closer to the bottom than we are the top. We're closer to bouncing. I will say this. Check this out. This is an important level I'm watching. It's just Bitcoin, man. What is going on with that? It's back to 101. I mean, it's, it could take out, if it takes out this low overnight, I mean, takes out 98. And I mean, every time it goes up, it doesn't go up as the previous time. It keeps setting lower highs. The moving averages have rolled over. It's just not a good look for this thing. Anyway, but here's a number that I'm looking at. Or here's something I'm looking at, not really a number, but look at the Qs. All right. They went up and made a high October 10th, 9th and 10th, and then they sold off 14th, 13th, but then they came up and made another high the 20th, and then they sold off. But anyway, this triple high right here, that was the high for a while, but then they did what's that called, where you gap over the old high? There's a name for that. Anyway, it's extremely bullish. So but basically this kind of is having the looks of a big island reversal. I mean, you wouldn't want to get back under these triple highs and start trading in this range again. That would be bad, and it would make this look like a bull trap. And it probably would trap bulls, and there may be people that are trapped. And if it does that, so I think this level's crucially that we hold this level tomorrow. And if we don't, we're probably going, to 600 on the Qs. That's just my guess. Now the SPY has a similar thing, but we don't want to. We want to stay in that upper distribution here. And the SPY's already slipped back well under that, well under the same area on the chart. Now it rallied and just kind of closed the day right on it's retesting the breakout. I mean, that's what I'm getting at. And you don't want to lose this. I mean, because in the SPY's case, then we're probably looking at 663. And that would also make sense because it'd be a trend line test. When we had a trend, and that wouldn't be the worst thing in the world. The last time we had that happen was October 13th. We were just talking about the triple high there. Highs made on the 9th and 8th, 9th and 10th, and then we sold off the 13th and 14th. Yeah. So anyway, we'll see. Tomorrow ought to be interesting, but I'm just not liking the way Bitcoin's looking right now. The VIX versus VIVIX indicator shaped up a little bit by the end of the day. It's a 2 out of 3 warning symbol. It's not 3 out of 3 like it was this morning. Anyway, we'll see. We'll keep an eye on that. All right. So that's all for that. Let's look at the lightning spread results. Okay. So we want to have blue over red here. This is the cumulative total return since day one. And it's been close. Blue got over red for a while. The lightning spread was performing better than the underlying, which is great. And but then we had some down days recently, a big down day 2 days ago, and pretty big down day 5 days ago. And we had and then a giant down day back here. I guess that was probably the 13th of October, I'm thinking. Now the good thing, oh, these are just daily results. This isn't cumulative total return. I'm sorry. These are daily results. So for the day, the QLDYs and the Qs were down the same. Yeah, these are daily results. But now let's look at the cumulative result. We did fall a little. We're losing ground on the cumulative result also. Now we're still, both of them are still above water. They still have their heads above water versus when this started, probably a month and a half ago. And it's close. I mean, total return of QLDY is 2.4. It's 2.7 on this, on the Qs. So that's that. Let's look at something. Terrific trio. Mainly, I just wanted to look and see the, you know, how these did. So here's LFGY. So this thing down 5, man. Bitcoin's killing us. I mean, my gosh. You know, and if this one was down 5, you can imagine what blocks is going to be down. And you could also imagine what Alti is going to be down. I say Alti maybe 2.5, blocks probably 7.5. So let's see. Anyway, these guys didn't get one stock right. They pitched a shutout, or they got shut out. Let's just say that they got shut out today. They didn't pitch a shutout. They were the batters, and they got the no hitter thrown against them. All right, so Alti, I'd say, you know, it's going to do better than this for sure. But I mean, on a day like today, probably 2.5 something. Yeah, 3.4. Anyway, their average stock was down 7.9. They have about a 50% buffer versus their average stock, whereas LFGY had about a 20% buffer versus the average stock, 5 to 6, whatever that is. That's actually it's 1, but it's 1 out of 5. It's 20%. So that's exactly what I said when I was estimating. All right, well. Some days a diamond, some days a stone, right? There's an old country song. Some days a diamond, some days a stone. Today was a stone. All right, so let's look at blocks. Now, blocks is a cubic zirconia. I mean, we'll see. I don't know. Maybe it rallied. Oh, good job, David. Okay, it wasn't down quite as much as I expected. 6.5, still leading on the way down. They also got no hit by the defense or by the pitcher. They didn't get a single man on base the whole time. Well, it's just one of those days, right? So now let's go over here. These charts aren't much to look at, but Alt I was down 6.8. I think that's almost exactly what blocks was down. You know, and now yield. Let's see how Howard did. See if, you know, how his results were. 3.9. Okay, not quite as good. Well, actually, no. That's the best one. That's the best one so far. Great job, Howard. Yeah, that's actually the protection champion today. Good job. All right. So we have that, and then now let's look at WPay. WPay is 4.2, so it's down more than ULTY, but it's down less than those other ones, except for the one I just mentioned. Anyway, now let's look at QLDY. I mean, I know we looked on the chart of it. It was 1.68 or no, 1.85. Okay. Well, I mean, that's actually the best protection. All right. So let me see what else we have going on. Oh, there's 50 of you guys here. I sure appreciate it. All right, I'll take questions now, or we can look at other stuff. Make sure I don't have any. So Froggy grabbed some cheap stocks today. Good for you. Good for you. If the SPY touches that, if the SPY tests that trend line, I mean, which would mean it's going to fall quite a bit more, then I'm going to buy something. I'm going to buy something if it touches the trend line. Probably ULTI, because I've been wanting to add that. I'm just trying to get a little better price here. But anyway, okay. So let's see what else we're going to look at. I guess I just want to make sure you guys don't want to talk about anything specific. Yeah, I mean, K yield. I mean, Howard has the record for. I mean, yeah, absolutely, absolutely. So Richard has some dry powder. All right, good job, Richard. I have some dry powder too, but I need to put it to work. Or I was just thinking that I either need to put to work or I need to buy bonds. It's 20% of the account. I don't want it sitting in cash, and I wouldn't buy bonds. I'd buy a box spread. But I thought about buying bonds. I thought because I could buy bonds and still buy stocks and double dip, just buy stocks on margin against the bonds. You know, not use margin, not money I don't have, but just get. I heard on Tasty Trade that's what some people are doing. That you can, if you have $100,000 account, you can buy $100,000 worth of T-bills and still have $100,000 to spend. And anyway, who's drinking a case of Bud Light? Sweet, good job. I like Bud Light. I like it anyway. Drank a lot of Coors Light in college just because that's what everyone else is drinking, but it's not a very good beer, but it's just what all the other college kids were drinking in the mid-'80s in Oklahoma. I always preferred Coors regular, but, you know, the girls like Coors Light back then, so that's what all the guys drank. All right, anything else going on? Max, okay, here's a question. My question yesterday about PayPal versus PayPal. Over the past 6 months, PayPal is down 3%, where PayPal is down 23%, which seems quite odd. Well, let's look at that. That's a good question. Those are the kind of questions I like. So, in fact, we could do that. So, August. So, what is that? July, June, May. So, let's roll it back to May. And let's go PayPal and PYPL. Well, yeah, we did look at this last night too, but so you're talking NAV, what you're talking, but that doesn't surprise me because PayPal doesn't pay a yield, and it's just the yield coming out of it. On total return, actually, you know, they're close. I mean, one's down, you know, less than 1%. The other one's down about 3.5%. That's not a huge difference, you know. So I think that's, I mean, I think that's to be expected. But yeah, it hadn't been a great, that one doesn't look like it's been a great investment for sure. But of course, even if you would have bought the underline, people say, well, just buy the underline. Okay, well, even that underline would have been down if you would, I mean, so either way, that's just, we need PayPal to go up for that one to start doing better. I have no discipline either, but I'm getting a lot better at it. I didn't used to, but actually I've surprised myself lately. You're going to withdraw all your income next week. All right, Grumpy, for bills. Yeah, I hear you on that. You love SPY the most. All right. Well, hey, high yield dividend warrior, I appreciate that. Yeah, I mean, SPY. I mean, remember, if there was an editor's choice, you know, I mean, I'd probably choose SPY too, or maybe T-SPY, you know, or big. I'm really fond of Big Y, but yeah, if it was me picking, but when I pick, I use different. I'm also trying to think about what's going to be best going forwards and stuff. We're just looking at the past quarter, you know, what's been the hottest. But yeah, if there's an editor's choice, I mean, probably Big Y or SPY. So yeah, for sure. Last year you received $300K in dividends, but your principal barely moved. Well, that's awesome. So you had stable NAV and you still got dividends. So let me guess how you did that. Did you have some? You had some Misty probably, and you had some single stock stuff, and maybe some round hill like XDT, QDT stuff. That would be my guess. Let me know if I was close, but I would guess you had some single stock that did well. Maybe some Coney, some Misty, you know, and if you did have some index ones, it'd be the ones that were the better performing NAV ones. Maybe T-SPY, XDT, something like that. Maybe even SPY. All right. Yes, all is well for sure. For sure. Excuse me. All right. Well, any more questions for me? I'm sorry, Grumpy. That sucks. I didn't even look at my account today, but I mean, my biggest fund, my biggest position, my second biggest position is blocks. You know, my first biggest position is Alti, which was down. What was it down? 3.4, 3.8, something like that. 3.4, I think. So, and then my second biggest position was blocks, which is down 6.8 or something. So yeah, it was ugly. I wonder if K gold went up. I bet K gold and my inverse was the only thing that went up. Anyway, that sucks. Oh, I misunderstood you. Okay, I'm sorry. I see what you're saying. Yes, I got you. You got dividends, but it barely equaled yeah, I got you. I got you. Okay. So let me guess again then. Anyway, yeah. So you probably had some of the, who knows? Did you have any Alti or I don't know. I mean, you're down 1.75 today. That's probably what I was down if I would have checked. Is Tasty Trade up? It's not up right now. Yeah, Sai is a good dude. Marcus down 3.2. Yeah, that sucks. Neos has a beta of 75. Yeah, good. That's correct. And meaning it gets 75. It's beta means it gets. It's I'm trying to think. It's not that it gets 75% upside of the SPY. It's that it moves around. It's correlated with the SPY. That's what it means. It means that's a correlation measure. It goes in the same direction and by the same magnitude as SPY 75% of the time. Whereas if you looked at, I don't know, there's higher beta ones out there. I bet T-SPY is higher beta or whatever. But anyway, yeah. What I'm showing instead, I could have showed beta for my stability, but what I wanted to show though is there's beta only goes to 1, you know, and I wanted to show what I'm using is standard deviation. I'm measuring how crazy it is on the upside, on the downside. You know, basically I made a measurement that's a similar calculation to VIX. Now VIX is based on the IV of SPX options, but from the IV, it implies the standard. It implies it. So, but these things, I'm not looking at options. I'm just looking at the price action to imply a VIX type measurement. So that right there is my stable DEX. So, look at these, you know, FIAX is the most stable Bondi, you know. But anyway, so this one's 3 times as stable as the SPY, you know. I could do a column that has beta. I thought about using beta, and there's all kinds of things you can do with beta too, and correlation metrics and stuff. All right. Only good news you have today is Pelosi's retiring. Correct. Yeah, that was good news. But I mean, isn't her daughter going to take over or something? Or here's the thing. Even if it's not her daughter, I mean, remember San Francisco, it could be somebody that's even, you know, you never know. She's an institution. She's okay. I just hope I think maybe if they really will solve something, maybe Trump won't like the fact that the market's dropping, and maybe they'll figure if they can solve the government shutdown, that people will have jobs and they'll feel like spending money again. And then maybe we'll get the Santa Claus rally, you know, that I'm hoping for. I think you guys are too. Yeah. Pelosi's doing 0 DTs. Her, yep. No, what they do is they just, they leverage tech stocks. That's why they outperform. I've looked into it before. They have NVIDIA. They just have big cap tech. But what they do is, instead of buying shares, Paul buys leaps. And so depending on how far out you go and time wise and strike wise, a leap is, you know, is probably like a 3 or 4x fall, or 3 or 4x, not vol, but 3 or 4x is as volatile. No, it's levered is what I'm saying, because let's say you could get a leap and the leap costs, 30% of what it would cost to buy the stock. And that's not even including if they're using margin, but they do a lot of leaps. And if you do NVIDIA leaps, just imagine, or Palantir, they have NVIDIA. I'm not saying they don't also make money because they know what's going on and stuff, but I'm saying in addition to that, they use leaps. So they use leverage. Because I looked into a few times before. All right. Well, good job, Skeptic. Up 23% year to date. And didn't you just start investing a couple of years ago? Basically, you start taking it seriously. I mean, that's really good. Whose sister got Palantir at 9? That's awesome, Redfish. That is awesome. So when stocks are that cheap, it's like a leap. Or that's a $9 stock's almost like an option. You could buy NVIDIA options nowadays that cost $9, but a $9 stock, if you can find a growth stock that's that cheap, and it's or a stock that's going to grow, it's like an option that never expires. That's great. You went to full dividend degen around August. I gotcha. Yep. All you need is the right allocation, according to Marcus. I think that's a good theory. Gosh darn it. I was hoping to see, I feel terrible. I was hoping that Mayer would be in here, but I don't see his name in here. And I was also hoping, I totally blew off a question from Bob Davis, and I saw it in the replay, and he wanted to know my thoughts on Granite shares, and that would darn sure be something to look at. So I'm seeing if Bob's in here, or if Mayer's in here. Well, and Mayer spelled like John Mayer. I don't know if he's a John Mayer fan, but it's not spelled like M-A-Y. It's not spelled like a mayor of a town. All right. Well, I'm just going to go down to the end of it. All right. Let's see what gold and silver did today. Or by gold and silver, I mean K gold and K silver. Well, I mean, that's fine. It's down 14 basis points on, that's fine. Silver is down 8. Okay. All right. Well, I was hoping they might be up. Looks like the only thing that was probably up is something like TLTW had a big day because it's based on the TLTs, and we've been having bond rallies. The bonds have been rallying lately. We moved all the way from 86 up here to 92. We pulled back a little bit, but yeah, TLT, and then there's TLTI is probably a good one to have today. So look at this, old Howard. I'm trying to show you guys something. I left it open in one of these windows. I thought I did. Well, look at this tweet. This is a pretty, I mean, it's good, but I mean, it's kind of out of character for Howard. I was almost wondering if he got hacked or something, but I like it. I like the spunk. It says, Howard says, the guiding principle for Curve Invest has always been to act as the best fiduciary for our investors' capital as we can, whether it's generating outperformance, guarding against NAV erosion, or through other means to help people reach their investment goals. But then he's throwing shots out here. No need to launch a new fund every week to update our investment style. Ooh, that's a spicy one for Howard. I mean, I like it. Like I said, I'm not making fun of him. But it's it's getting kind of contentious on Twitter with all these fund managers. I mean, first it was Roundhill and YieldMax going at each other, and now Howard's jumping into the fray. Anyway, I thought that was good. All right. Any other questions for me? Since there's so many, just if you have a question for me, put Max. And then when I'm scanning through these, I'll just answer the ones that say Max, and I don't have to read all of them. All right. Well, good. Yeah. But if something you want me to read, say Max. All right. Well, let's look at this. Let's see. let's do this right here. Let's look at, let's kind of look at the whole ball of wax. Let's get out all the funds, and let's see who got beat up the worst and who did the best too. This is stocktools.app. It's a really cool piece of software. I have an affiliate link there, stocktools.app/Max. You get a free month, I believe, or you get something that's more than you would get if you just signed up on your own. But in either event, sign up on your own if you want to. That's fine too. Even if you sign up on your own or with my affiliate code, the first 2 weeks are free, and you don't even have to put in a credit card. And it's a really cool. It does a lot of stuff. Go check it out. Like I say, but if you end up getting it, then I get a little commission off it. So all right, let's see what the worst was. HOOW 13%. My gosh, wow. MST down 10. Now that one's double leveraged Microsoft, or not Microsoft, double leveraged MicroStrategies, or strategy, in other words. Hui, of course. Okay, so true to that, HOW uses leverage, HOY doesn't, and so that doesn't surprise me. That's the way it should be. On a bullish day, of course, HOW would be beating HOY by probably roughly the same amount. So, all right, COIW got hit for 9%. Now COI2 also got hit 9%. I mean, that's basically a tie. Then we have MSTW from Round Hill down 8.7, PLTW from Round Hill. The Round Hill funds are getting hit today, of course. AMDW down, but it's not just Round Hill. I mean, CO2 is down basically the same as their counterpart. MS2 was down 7.3, where MSTW was down 8.7. That's MS2 did a better job there for sure, but that other one was basically a tie. CO2 and COIW is basically a tie. Then we have Coney, iMist, Blocks. Of course, we already spoke about Blocks down 6.5. Misty, Morrow, Palti. Yeah, Palti's getting hit. Hope the AI bubble isn't popping. That's all I'm hearing about. And also that darn Michael Burry shorted shorted Palantir and was all over the media a couple of days ago, and it's been doing nothing but going straight down ever since. He must think he's so smart. He shorts stuff all the time and it doesn't come true. I mean, he's been short lots of times. What was it last year? He said, "I've never been this short in my life," or something, and the market kept rallying. So, even the pros, they know more than we do for sure, but it's still an art, not a science at the end of the day. All right. AMYY, that's Granite shares. That's the first Granite, or actually HOYY. The Granite shares actually seem to have fared a little bit better than these other ones. I mean, just looking at the companies, it's Defiance and it's Round Hill and Rex. It looks like are the main ones that got hit. And then the sprinkling of Yield Max. And then as we go down further, we have the first Granite. I'm surprised that Granite shares didn't have one that did worse than that. But anyway, AIYY got hit from Granite shares. Everything got hit today. Let's see if anything was up. This is depressing. Let's see what was up. All right. Well, Fiat and crash. Okay, that doesn't count. Murni. Now, what is going on with Murni? And I mean, look at this, catching more than the parent's upside. I mean, that's incredible. Winter. I mean, of course, it's an inverse, but Babo also. So there are places to run and hide. You could go to China. You could do oil, as in Zomo, or inverses. I'm not really counting inverses, but that would work. Also, JP Morgan also protected capital today. That's nice. It was up 1%. Berkshire was up. TLTI. I did say the TLTW would be a good day for that because bonds have been rallying, and here's TLTI. TLTI, I haven't seen TLTW yet. It looks like TLTI was the winner between the two of them. Right, I was just scanning down here ahead, but there were some green areas. Goop was green, Infly was green, Cashy was green. That doesn't surprise me, but HYBI, that's from NEOS, and that is a high yield bond index, right? I think those are high yield governments, or those corporate. No, those are high yield governments, I believe, government bonds. I think they could be corporates too. All right. Well, that's depressing. Let's look at maybe a month and see if we still have anything that's doing. See what the shining star of the past month has been. What do you guys think? I mean, Palti, Hui. I mean, who's been really killing it? I mean, I know Palti's down lately. Tell me it's not an inverse fund. Is the one up most on the month? Yep, it's an inverse fund. But yeah, MicroStrategies is just getting beat up. I mean, their strategy. But Google's legit been having a great month, and they were even up today. I mean, that's amazing. Goop. So, of course, the Roundhill one, because of the leverage, helps, in a bullish situation. So it beat the other Google surrogates. It beat Goop by about 4%, and it beat GUI by about 6%. Great job, Roundhill. You guys do a good job. AMDW did have a heck of a month also. And so, or AMD had a heck of a month, but AMDW was the highest of the AMD surrogates. It beat the YieldMax version by about 1%. Yeah, 1.03%. AMZW, Amazon had a decent month. Snowy's have been looking good. Tesla, of course. Even after this recent downturn, I mean, there's still some positive things on the month. Let's look at the worst on the month. MST, MSTW, BITX, MicroStrategies and Bitcoin, Maxi, Coinbase, iMist, Ethereum. Yeah, that's kind of the way it goes. These are all, I'm surprised Alti's not down here. Well, I'm not really because of the puts. But yeah, the ones that did really poorly are Coinbase, MicroStrategy surrogates, and Ethereum surrogates. Well, all right. Yeah, kind of a rough day. So what do you talk about there, Grumpy? MTPLF has screwed you this year. Let's take a look at that really quick here in FinViz. Was it MPLTF or? Gosh darn it. I'm sorry. MTPLF. All right. Well, anyway, it's not showing up. I'm sorry it's not doing well. Let me see if I find it over here. Well, yeah, there's MTPLF. Anyway, I don't know why it's not showing up in FinViz. Yeah, it did look like it's pulling back lately. Oh, it's Metaplanet. Okay. Oh yes, I've heard of that one before. Don't they own a name brand company like a gambling company or something, or they own like Kalshi or one of the or something? Yeah, I've heard of that. I've heard of that one before. Metaplanet. Okay. Who took a one-time write down? Oh, Infly. So Netflix was up. Yeah, I got you. I got you. You notice that Coinbase regularly block their own users out of their accounts. I use a VPN and they locked down my account. It ran really, and I hate to hear that. So you bought shares of Triple QI to watch it when they switch to 30%. I always take a beating from Defiance, which I have 26% total return in 7 months. Well, I have a little bit of Triple QI. I bought it back in December, but then I sold it whenever the market was going to crash in March, and then I never did buy it back. I just have a few odd shares of it. But by the time I was buying stuff back, I wanted to get gold and stuff, and I wanted to get LFGY, so I didn't add that back in. But I probably should have. That's pretty impressive. How long have you had that? That's crazy. Well, total, it doesn't really surprise me on total return. Some of the Defiance ones can do all right on total return, depending on the circumstances, but just not so much on NAV return. But let's do, of course, Triple QI is a good one. We're going to look at all these tomorrow night, but yeah, I mean, Triple QI is as good as it gets. And, Neos, they do monthly, or they do longer term options and everything, so they pay less yield. Yeah, they pay about half the yield, but they're generally more NAV stable. So went from 48 to 55 on NAV for Triple QI, but heck, Triple QIs went from 24 to 25. Or I mean, it made like 20 cents on NAV. So basically, you're just getting if it can make 20 cents on NAV, in other words, be stable, whatever the yield is your profit. And heck, yeah, I'm glad to hear that. Maybe the 30% was the right target for them. Let's look at SPY-T, speaking of Defiance, and XPay from Roundhill. They both are target 20s, and XPay's got them, although that's close as well. Now this is going back to May. I guess we could go back further, but that's 6 months, I guess. Let's go back a year. But yeah, I'm glad those Defiance target funds are working out. So we should also look at WDTE because it's from Defiance. It's a target fund. We'll compare it to something here in a second. Anyway, so yeah, XPay's just doing a great job. They're both, 11% in a year is not bad, but 15's better, right? All right, let's check out the WDTE Defiance Target Fund, and we'll compare that against QDTE from Roundhill, which isn't a target fund, but they generally pay 35-40%. So I think it could be a fair comparison. I bet QDT beats it, and it does. So now let's look at the yield, though, and I'll see if I was right. So QDT paid $12 on 42. And yeah, the same yield basically. Actually, QDT had a little bit more yield, and QDT had more yield, but bled off a little NAV, went from 42 to 35. But it looks like it paid about 35%. WDT probably paid around 30, paid a little bit less, but they went from 41 to 33 on NAV. I mean, that's really close. Those two are close right there. I'm going to peruse the comments one more time and see if there's any questions. But I've been going an hour, so I'll let you guys go unless there's anything else. Like I say, put max, or if I didn't see it up there, do you want to put, re-ask the question? 70 people here. I think that may be a record, except for the time that I was on 2 Fridays ago and I had like 251 people, but it was just because Rod went to and retweeted my link to his followers and then came in here and hung out. So, but I thought I was going viral or something. But I hadn't checked my Twitter feed, and I checked it out. I was glad that Rod did that, but I would have been more glad if it was organic. But anyway, this 70's organic, and I'll darn sure take that. All right. So what are you saying, Froggy? You think that's why the Yield Max Target 25 funds may be sweet? They may well be. I just know less is more. I mean, all the ones that have the great stability, all the ones that have the great reputation for stability. I mean, big reputations where pretty much everyone would agree. Yeah, that's a pretty safe fund. You know, you have SPY, T-SPY. SPY pays 12, 13%. T-SPY pays 14%. You know, generally you got to get in that range for the ones that just everyone will agree. Yeah, that's the greatest fund ever. But those are for indexes on a single stock. But so in other words, I think indexes maybe 15 is the sweet spot. In single stocks, though, because they're more volatile, and they, you know, maybe 25 is the sweet spot for single stocks. Well, I mean, we'll just have to see. I did post it tonight. But sometimes I forget to. When I do it live during the day, sometimes I forget to even monetize it. But tonight I did. I went and I made sure it was checked, monetization on, and I posted it to Twitter. And I think when I don't do anything, I get 50 people. And tonight I did something and I get 70 people. So we're definitely going the right direction. Oh yeah, I was going to show you guys something else. Speaking of ULTI and KYLD. Yeah, and I think QLDY is actually holding up well, all things good. In fact, I know it is. The past couple of days, it's been down less than even less than ULTY. You know, less than WPay, less than the other ones that are also doing a good job. All right, so you saw YieldMax's AUM drop by $2 billion. So are you talking, the overall company? So I wonder how much of that is people selling and how much of that is the market pulling back. Remember, a lot of their stocks, their biggest one is Misty, right? And Mister's been getting murdered. So I wouldn't be surprised if $1.5 billion of that was due to decreasing asset base. But there are definitely people selling. I'm not trying to sugarcoat it, especially in ULTY. And I said, probably not soon enough, but I said, you know, probably too many people got in. It should have never been a $3 billion. I said it would settle about 2.5, right? Or something like that. I said it would probably bleed off about $1 billion. That's about what it's done, I think. But yeah, but also some of that is also from decreasing asset base. I bet you out of that $2 billion, I bet you about half of it is people selling, but about $1 billion of it is people that are holding like me and that are happy with them. I mean, even the ones that are the good, safe ones, like Big Y, whatever, that's a good, safe one. But, you know, because the market's going down, but they just have so much exposure with Coney and Misty, you know, those alone, even if no one sold them, just how big they were and how far the market's dropped the past couple of months. Yeah. What keeps you hopeful with Alti? Well, remember, I don't have that much of it. I just have 20% of it, and I'm using it to boost my yield. You know, it does a lot better than blocks on it's my defense. Blocks is my offense. I mean, it was down a third, you know, it was down half of blocks today. It protects capital great on the way down. And they'll go back up whenever their stocks turn around also. I mean, it's not, you know, so, but that's why I use multiple ones. I have for my upside ones, I'm hoping that QLDY and WPay, and remember I have WPay also, and blocks. Those will do well in the bullish market. But I have Alti for days like today. I'm perfectly happy with Alti. But yes, it's been performing poorly. I mean, I wish it would perform better. So let's look at this. But just when you know, there's a lot of if you just listen to the internet, you think it hasn't gone up and whatever. But look, it's actually, I mean, it hasn't, you know, I mean, just last September, I mean, September 10th, it started rallying again. Whenever its stocks go up, it'll take back the moving average and start trending up. It's just that stocks are down. The stocks that it uses. Which are primarily crypto and Russell and more speculative companies. Yeah. But I definitely wouldn't have all my money in that, but I think for 18%, remember, I'm trying to take it down to 15, but also, I mean, the market might take it down for me. In fact, we can look at where's my current allocations? I had that up. But yeah, don't stay in it because I am. I think it's fine. It's fine as a piece of a larger puzzle. Also, remember, the other thing is I don't need the money. That's just reinvesting. So I mean, I'll put it this way. I've made $4.90 worth of dividends off it, and my average price is $7.93. So it's like 203 is it has to drop to 203, and it'll drop to 203. What's it at? It's at 4 now. It could take another year to drop. It drops about 50%, especially if the market turns around and goes up. Or say it takes 6 months to drop, to drop to 2 or whatever. But then I'll have what's 6 times 4? 24. I'll have 24 more dividend payments. So even when I get to the break even, that won't be my break even. And at some point in here, it's not like it has to go down forever. It'll turn around whenever the market turns around. It was just. Let me show it this way. But yeah, if I was trying to live off it, that's why I made that stability index and stuff for people that are trying to live off it, or the safety index. You definitely wouldn't want to, I think, live off it, but you could use this part of a bigger puzzle to try to bring your average yield up. Okay. So what was I going to show you? So it wasn't like it only went up this summer. Granted, June and July was a massive rally. But it's not, everyone thinks, it was just hot then and it sucked ever since then. No, it went sideways for a while, actually came down. People were jumping ship here in August too. Oh, this is the worst thing ever. Then it started going up again. And people were like, see, I told you it's going to go up again. But then it started going down again. So let me see a better way to show this. Let me do it like this. But I keep calling it crypto, but I'm talking it's the same stocks ULTI from Rex is going to do. It's doing even worse than ULTI is. Because it doesn't have any downside protection. But it's using all the same types of stocks, the meme economy. So look at this. So take a look at okay. So check this out. This is interesting, I think. Okay, of course it's on fire because look, crypto went from, hang on, let me take this off percentage and put it on regular. What the heck is that? Oh, gosh darn it. Well, anyway, you can see, I don't know the prices on crypto, but between April, this is when I bought LFGY and GPTY, crypto and AI and everything went crazy. You couldn't lose. You could buy anything when the market's doing this. And the market did that. But then look, crypto topped out a little bit before Alti did, but then it made one more top, and that was a big bull trap. And then sure enough, it sold off since then, and sold up, and Alti did too. This crypto's close to the meme economy. It's not really the same thing. But then we did get one more push. We got one more push, and of course, Alti crossed its moving average and went up. If we get another push up, the same thing will happen again. It's not Alti's problem. The market's going down, and it's actually, that's why I built this other chart. It protects capital better in down markets. So yes. Anyway, so that's why else I like it. LFGY has been doing okay lately. Yes, it has been doing okay. LFGY was a great investment, and I got that at the perfect time. I know you guys were pulling for me when I got that, but because I bought it right. Because Marcus, I think you even told me, man, yeah, you did a good job. I bought it right on Liberation Day, and a lot of it. It was like 15 or 20% allocation, and I wrote it all the way up. Okay, what were you saying about Jay? I had a question about Jay. Okay, Kenneth, I don't think I've seen you around here before. I appreciate you. Say, Max, Bug and Jay's here. We have enough Yield Max funds for every day of the month. Think of the merch opportunity they could sell. Or wait. We have enough Yield Max funds for every day of the month. Oh, are you talking an every day of the month distribution, or I don't get it. But we'll have Jay on again, or I don't know why Jay on, but we'll have Mike Coe on again soon. So what's this here? Yield boost is a better option for just income, in your opinion? That's a hot take. I had some yield boost, and it treated me fine. It was YSPY, and it treated me fine. But Yield boost is kind of a controversial product, kind of like yield max, but both of them, and that kind of makes sense. Yeah, people are selling, but you don't think any of that's because of the asset base going. I'm not saying people aren't selling, but just think. So assets under management, there's two factors in it. It's also how much the assets are worth. So yes, people are selling and the assets are shrinking. I'm just saying it's probably about half and half. Maybe you're right. Maybe 3/4 of that was people selling and the assets shrinking only dropped it by $500 million or something. But I'm thinking because their two biggest single stock funds are Coney and Misty, and those have just been in the dumps, that a bunch of that's due to the shrinking base. But yeah, I'm sure people are selling too. All right. What's market saying? No, they could definitely have gone down more. I see they're actively reducing a lot of decline. Oh yeah, they are. So the combination of the protected downside, they do much better on the downside. And the thing is that I'm reinvesting all the dividends. So, but yeah, if I was trying to live off of that, I would put it into something that paid less, but that was more stable. And that's why I made that index. But I don't need it. But I'm saying that's what I made the safety factor for. If I had to live off it, where I was, because the thing is, if you're just reinvesting the dividends anyway, if it goes down, you get the lower price. It's the same difference, But if you are living off it, you don't have the money to reinvest the dividends. Of course, you could also do just where you take like 10% of the distribution and put take 20% of the distribution, live off of, and put 80% back in. But the key is on something that pays that high, you're going to have to drip, have to accept NAV loss, or some combination of both, or have to get something. So let me show you. So if I had to live off it, and it was it's also not the only money I have. I have investments other places. But if it was all the money I had in the world and I had to live off it, I would look at safety factor and look at stability, and I would find me something that paid as high as possible, something like Big Y, or something like, something like Big Y, or something like IVVW. This one passes the eye test. Look, because this one pays 17%. I mean, super stable. XPay also. I mean, XPay has been doing well, but I wouldn't get that one because if the market turns down, it's not gonna outperform because you're selling stock, and in an extended downturn, there's no free money. It looks good on the way up, but yeah, I would, if I had to live off it, I'd get Big Y or IVVW, maybe T-SPY or SPY-I, something like that. Yeah, and so instead of making 80%, I'm only making 11, but you aren't really making 80% after you factor in the NAV decay. You're making what, about 10 or 11. So it's that there's no free money. It doesn't matter how you do it. They're just options. You just can shift risk from one part of the profile to the other. I think I looked at Alti's total return on the past year, and I think it's like at 10%. So, I mean, you can, but these other ones probably have, it's about the same difference is what I'm saying. You can take one of these that pays 10%, or you can take one that pays more, and your total return is going to be 9 or 10%. Yeah, if I had to live off it, T-SPY, SPY-I, or Big Y. And if I had to live off it and I thought the market was going to crash, I might go for like RSPA and try to get less concentrated. Yeah. Yeah, but Alti would have to drop to $2.03 tomorrow. And then I would be even on it. And right now I'm up like 11%. And I was up 20% or 22% when I sold some a month ago. But now because of the pullback, I'm up 11%. Once the market makes a new high, it'll turn over the trend line and it'll start going up again. Anyway, so who bought some XPay today? Great job, Penelope. Awesome. Speaking of ROC, you just discovered Yield Boost has 100% ROC from XBTY. Yeah, I was looking at something today. I forget, it wasn't Yield Boost, I think it was Yield Max. Anyway, it was 100%, 100%, 100%, 100%, 100% every distribution. But then recently they had a distribution last week or something that was not 100%. But yeah, lots of return of capital lately. Penelope, thank you for being here. I don't know if I've seen you around here before. I think you have been in there a time or two. I remember your name. Yeah, I didn't really know about IVVW either. I mean, I did a review on it when it first came out, but I totally forgot about it. And that's why I always say that's why I invented. That's the other reason I invented the Max Factor, because you guys are always asking me questions about these things, and lots of times I might know a little bit about it, but I don't have time to follow 150 of them. But if I pull up the Max Factor, I can instantly see everything you need to see. We can see yield, we can see NAV return for the year, NAV return for the quarter. We can see this, basically the VIX. The stable DEX is basically, I'm trying to make a VIX like a VIX style measurement. Anyway, and then I have that new thing, the stability index or the safety factor. I'm going to call this, and I'm thinking about switching this to NAV safety, because what this does is it goes for the most NAV return you can have per unit of stability. And it factors in the stability, but it's looking at NAV return, not total return and not yield. So I'm thinking about switching that to the NAV safety. But this one's still going to be the stable DEX or the stability index maybe. So this one right here is the VIX style. Well, actually, it's not VIX style. I had an old index that was called volatility, and that was VIX style, but I used the volatility with the VIX style index to make the stable DEX, because I hated trying to explain to people that you wanted lower on volatility. So I switched it to stability and used a math trick or whatever. And but it doesn't change. It doesn't change the calculations. But anyway, but yeah, so, if you wanted to live off it, I was going to withdraw it. I mean, there's lots of good choices. I mean, if you had to have a single stock, I mean, I'm not much into singles. Well, K Gold is a good one look at this for NAV safety. And of course that doesn't surprise us. Devo's a great one for NAV safety, but I don't know if I could live off 4% income. You could, but well, you know what I'm saying, but I like the ones that reward you in some yield and get NAV upside. So I think as far as NAV safety goes, yeah, definitely be. Oh, this is for the whole. Okay, this is for the whole. This is for everything. Earlier we were looking at SPY based. Okay, so if looking at everything on NAV safety, yeah, iDevo, SPIN. I mean, this SPIN is S&P high yield fund. From who's it from? It's from the people that own the SPY. It's from State Street. Anyway, I mean, 8.5%. This competes with something like GPIX. It actually competes better because I don't see GPIX ahead of it, but I bet GPIX is down here somewhere close. From Goldman. There it is, GPIX. They both have, when I say it competes with that, they have similar yield. One was 8.5. This one's 8.1. However, SPIN had about twice the NAV return and the same yield. So yeah, SPIN's had a that's one that's also had a really good quarter that you never hardly think about. But yeah, were it not for the Max Factor, I never would have noticed IVVW. I mean, I've been noticing the past few weeks that it's just knocking, it's always in the top 10. I wouldn't even probably notice something like iDevo or something, or Devo. I mean, because it's just not on my, the mainly things that people want to talk about are the high yielding ones. Mainly people want to talk about Roundhill or Rex or YieldMax or Granite Shares or Curve, so these other kind of niche ones just kind of would slip through my, slip under the radar if it weren't for this index. Also, if you had to live off something, there's that book, The Income Factory, and I mean, closed-end funds can definitely have a place. So CLM could potentially be one if you were trying to live off it. Let's see what other ones, what good ones we have. IWMW. That's the brother or sister fund to IVVW. And look at this thing. This thing's killing it on yield, 22%. Lots of good choices out there. All right. Anyway, I'm glad I turned you on to IVVW. Don't and look at IWMW also. Lots of good choices out there. Um, more than enough good choices out there. The other thing, also, the other reason I'm not worried about Alti, when I'm investing, I'm more worried about blocks than I am Alti. I can't believe no one's saying, why aren't you worried about blocks? What makes you, I mean, blocks is down 7% today. If the market doesn't recover here, I mean, blocks is going to kill me. Alti's going to do fine, but that's here. So here's the other thing. I also have a generally bullish thesis. Now that could switch, but I still think that I'm still believe in Santa Claus, let's say. So if I didn't have a generally bullish thesis, I'd probably be out of blocks, really quick. And maybe even Alti too. I might switch it. If I didn't, I might switch it for that RSPA, the equal weight SPY, or maybe some QQA, which is equal weight NASDAQ. I might even buy some Salty. If I thought we were going to do like we did in April, I'd probably load up on inverses. I'd do all kinds of things. But yeah, for right now, with my bullish thesis and considering the downside protection, I'm fine with Alti. If anything, I need to have my head checked for having blocks, honestly. Anyway, yeah, Bitcoin's killing this. That's that. I mean, as soon as Bitcoin turns around, Alti will too. Just mark it down. Mark it down. Yeah, I know it's killing. I was just being sarcastic, but I'm saying, but if you really, in the grand scheme of things, I know that people don't like Alti and don't understand why I like it or whatever. That's fine, but in the grand scheme of things, what's keeping me up at night is I'm wondering if I have too much blocks, and that's kind of why I've been hesitating about ULTI. ULTI is blocks. To say it was down the same amount today. So they're different, but you know what I'm saying. It's going to be so. Anyway, but yeah, blocks will turn around. It'll turn around when the market turns around, and so will ULTY, and so will ULTI. And of course, Howard's always going to do well. K yield will probably, he's doing a great job, and K triple Q is always going to be fine. So, so let's see. Oh, you worry about funds with more than 20% leverage? Yeah. Well, yeah. So that means for you, stay away from Granite and stay away from MST. Those are the only ones I know that are more than 20% leverage. The income boost products, and they aren't, I don't know how much, they aren't really leveraged, but they sell options on leverage. It has the effect of leverage. But really, blocks has the effect of leverage too, a little bit. It's not a leverage fund, but it acts like a leverage fund in the fact that it does better on the way up and worse on the way down. And I've said that before. I've explained that blocks is actually double long between the put strikes, loses twice as fast between the two put strikes, or makes twice as fast if it's on a bullish day. So, but I hear you. I'm worried about all these things. QuantumScape, didn't you ask me that last night, Joseph? I don't know much about QS. Does anyone in here have an opinion about QS? Let's look at a chart, though. Let's read the chart. But this thing's not going to be in the max factor because it doesn't pay a yield, or even if it does pay a dividend, it doesn't pay. It's not a yielding stock. I don't know. Some of these, I doubt this one does, but it's not a retirement planning type thing where it pays monthly. So I would bet it didn't pay a yield, but this looks fine to me. You would just look at this like this. You don't want to get under 1494, and so far it's stopped there. It stopped there. It got under 1494 right here. That turned out to be a trap. If you would have sold that, you would have been mad. And it stopped at 1494 there, and it stopped at 1494 there. Doesn't mean it'll keep stopping, but as long as it stays on this side of 1494, we're in pretty good shape. The moving averages just rolled over. The moving averages were green, which means they're sloping up. And recently, now they're both red. So it's, I'd say this doesn't look as bad as some other stuff I'm looking at. Hopefully if 1494 holds, that's fine. But if it doesn't, if it gets trading back inside here, I would imagine we're going back to 1270, or maybe even back, if that doesn't hold, back to this trading range here between, 8 and 9. All right, Marcus. The idea of Alt D is fine. It's just the distribution's too high. The concept of what? Yeah, it is. Like I say, but no one was thinking the distribution was too high in June and July and August. I mean, it's a very bullish bet on the market. It's very bullish. So yeah, it's just I'm telling you, Alt D will be fine as soon as Bitcoin goes up. And that goes for, I mean, WPay's been getting hit also. It's not a meme stock, but they have those types of high beta stocks. They've all been getting hit. But WPay will start going straight back up. As soon as Bitcoin goes up, it'll be fine again. You say too many names, too many down funds inside Alt D. Well, yeah, every one of them was down. Or are you saying just generally too many tickers? They should concentrate on less stocks. Yeah. But it wasn't just Alt D. It was BLOX and LFGY. I don't think any of them had one stock that was up. Actually, I think Alt D had one stock that was up, but LFGY and Blocks didn't have any. So yeah, I hear you both, and I got you. I got you, Joe. I got you. All right, guys. So I'm gonna let you guys get out of here. I appreciate y'all for being here, and we'll get at it in the morning. Hopefully the government will reopen tomorrow. This is going to make a big difference. I mean, even if it doesn't affect you, even if you have plenty of money and everyone has plenty of money and whatever, it's taking money out of a lot of people's, it's taking money out of the economy. So and people are also not spending just mentally, even people that have money are probably being more cautious with it. As soon as we get that solved, hopefully we'll get some good old fashioned consumerism going on. I'm not saying that alone will solve the market, but it'll just give a better vibe. Right now, the vibes are bad. It's a vibe economy. We got to get this vibe going, right? All right, guys. Well, thank you so much for being here. And Shane, I saw you in here last night. Thank you for being here 2 nights in a row. Anyway, guys, I'll talk to you later. You guys have a great evening.